Appreciate that. Again, my name is Dave, and I've been a professional trader for about 15 years, about 15 and a half years. And I have a trading room called the SPY Super System Trading Room and Alert Service, where we look for the highest probability trade setups that are out there every day in the market, and we trade them. And we trade them in the room, and we send out alerts when we find those high probability trade setups. So we're going to be going over that and the service, how it's performed over the last couple of years, as well as the tech service. But I'm also going to do some a segment pretty early in the webinar on Heiken-Ashi candles. I think you'll find this, if you haven't used Heiken-Ashi candles, I think you might want to listen to this. It's very interesting, and I think you'll find that this is an excellent way to improve your trading. So we'll spend quite a bit of time on that. Okay, let's get started. First thing I have to do is a disclaimer. All signals and trading opportunities we provide here are for educational demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors. All right, and if you have any questions during this, I'll keep the question box open in case anybody has any questions related to what I'm talking about, and I'll try to answer them in line if I can. If not, just put your name and phone number in the chat box, or your Skype username, and Rory from Right Line will follow up as soon as he can, and to answer any of those questions that you've got that I can't answer. Hopefully I'll be able to answer most of these questions that you bring up today. All right. Okay. Now this is just a quick graphic. This just shows the SPY Super System, what it looks like. I run this SPY Super System software on the Thinkorswim platform. I don't trade on the Thinkorswim platform. You do not have to have, you don't have to trade on the Thinkorswim platform, but this is where I get my indicators from that I'm going to show you how I identify when institutions are in the trades and when they're not. And this is just basically a graphic display of that. Tracking institutional money flow, knowing when the institutions are in trades and when they're not, is critical to becoming a profitable trader. And also, this is this kind of graphic of the text alert service. Comes out, their SMS alerts, they come out on your phone, and I'll go over that service here in just a bit. All right, first thing I want to do, and I do this in every webinar, a lot of people get sick of hearing about it, I think, but a lot of people are fairly new, or they don't understand what drives the market. And there's two categories of traders. There's retail traders, such as myself, and most likely everybody here. We're retail traders. We're these little bitty marbles here. And it's important to understand that when we're trading by ourselves, or without any significant institutional involvement in the market, we are just causing chaos and chop. You're getting, the markets are chopping up and down. You're getting chopped to bits. You can't get any kind of a trend. So therefore, when we're in the trades and the institution's not, we don't want to be trading. We want to be able to bypass those kind of trades. This is the institutions, this big marble. This is what drives the market. Institutions are obviously made up of investment banks like Goldman Sachs, JP Morgan Chase, Morgan Stanley, all those big banks that are big part of the institutional money. And now it's also important to understand that institutions have a couple of different, they trade several different ways. They trade and they invest. They have a trading desk where they actually have people who trade, but that isn't where most of the trades come from. About 80% to 85% of the trades that come through the institutions are what's called algo trades, so computerized trades. They have programs written to look for specific conditions in the market, technical setups, news. They scan the news and look for those kind of situations to occur, and they trade electronically off of those things with algos, very quick, of course. We'll talk about that in just one second here. Again, the institutions also include the hedge funds. Hundreds and hundreds of hedge funds make up institutions, are part of the institutions, as are pension funds, police pension funds, fire pension funds, state worker pension funds, billions of dollars in these funds. And all of these funds have money to invest and to trade. And lastly would be the mutual funds, such as T. Rowe Price, Vanguard, these big mutual funds, billions of dollars. So that's very important that it's to understand that when the market is, when they're putting money into the market in any concerted way, groups of them are doing it, a lot of people, a lot of the money is coming in from groups of those, that's what moves the markets, and that's what we need to identify. And it's important to understand about these algo trades as well. And to give you an example, if you watch the market, for example, on when the FOMC comes up, when the Fed does their Wednesday at 2 o'clock once a month, they do a release of what they're going to do for interest rates. They meet Tuesday and Wednesday. They release the information that Wednesday afternoon at 2 o'clock. Now, when that comes out, that's going to impact the market, and especially what they have to say in the statement is going to impact the market. And what you see is at 2 o'clock, in less than a second, 2 o'clock in maybe 100 milliseconds, you'll see the SPY will be shooting up or shooting down. Big moves in the market. There is no way humans can put trades in that fast. Those are the algos trading, and that shows you that where that volume is coming from. And you'll look and you'll see big volume bars, and you'll see these big moves. That's all algos, and that's what we're trading against, which is why we want to be trading with them and not against them. Okay, so I have a couple of rules to trade by in the room and on the alert service. Fairly simple. We trade the best and skip the rest. We're just looking for the very highest probability trade setup we can find. That's what we're trying to do. And skip the rest. And it's interestingly, skip the rest is probably makes you more money than trading the best is concerned. Because what we're doing here is skipping a lot of trades that would normally be losers. And you know, if you go back and look over your trading and find out if you could eliminate 20, 30, 40% of your losing trades that you take, I think you'll find that your profitability will go from either negative to being more profitable, or from more profitable to even more profitable. That's very, very important element right here. And the last one is, and I express this in the trading room every day, our objective is not to make trades. Our objective is to make money. And the whole point of this is to try to keep traders patient. In other words, if you have a winning trade or two winning trades in the morning, and then about 1 o'clock you're sitting there and you're looking at your machine, and you feel like I got to be in something, I got to be in a trade. And what you're doing there is your objective then is to make trades. It's not to make money. So we may sit there all day or most of the day and not make any trades at all. And we get out and we don't take any trades. We don't lose any money. We're even. We're probably a lot better off than a lot of traders that were taking trades all day long. So our objective is not to make trades. Our objective is to make money. We took one trade today on PNW. We took a short on PNW this afternoon and took nice profits in that. And that's the only trade we actually did today. We also did a straddle, but the only straight puts and straight calls we did was on PNW. One trade, one winner, step aside, take your money and go home. All right, now maintaining discipline is really critical. And people ask me, what do I mean by this all the time? Maintaining discipline to me means if you've got strategies or methodologies like we have in the room that are proven successful, we've been trading them for years, we've got thousands of trades in each one of these strategies, they're going to be 80% effective or more. And typically, I don't take anything that doesn't have at least an 85% win rate over 200 or 300 trades. But that means maintain discipline means stick to those stick to those strategies. Okay, stick to those strategies. Don't be listening to somebody on social media that's telling you about this trade that they've seen, this setup they've seen, this particular MACD crossover trade that they've seen. Find the ones that are successful, that you know are going to work long term, and stick with them. That's maintaining discipline. And then remain patient. You've got to wait for these setups to come to you. Be patient when you're looking for these trades. You have to wait. I mean, most of my time every day since I've been trading professionally is I spent way more time waiting, watching, and looking at charts than trading. I put some trades on, and when the market's bad like it is right now, it's been choppy for 2 months, we don't have very many trades on. When we get a trending market, I might have a bunch of trades on. But most of the time I spend my time looking for these high probability setups. That's what's going to make you the money. And you stick with those. So again, maintain discipline, remain patient. All right. And as a profitable trader, profitable retail traders, we need an edge. And remember who we're trading against here. We're not trading against the institutions. You're not going to beat the institutions. A lot of people like to think they will, but you won't beat the institutions. We're trading against other retail traders. And what we need is, such as the SPY super system, we need software that lets us know if the institutions are in the trade. We need better strategies and better methodologies than the other retail traders have. And if we do, we're going to beat them. We're going to take money from them. That's what this boils down to. Remember, you're kind of in a war here with other retail traders, and those with the best weapons, are going to be more successful. We're rolling in there with tanks and big guns, and they've got pea shooters and pop guns, and it's just not even a fair fight. Okay, so what are our edges over other retail traders? We have the SPY super system software, again, that runs on Thinkorswim. This I'll show you plenty of these charts. This software identifies when institutions are in the trades and when they're not, and when they're just neutral, when they're not doing anything. We also trade something here. This is really important. A lot of retail traders don't even understand what this is. Trade relative strength and relative weakness. Take relative strength or relative weakness is how is that stock that you're looking at, how is it trading versus the SPY or the triple Qs. Let me just turn off my news feed for a minute here. I have a news feed going all day where I get updates on the market, stocks that stand out, etc. We had one today that flushed around pretty hard here this afternoon that Muddy Waters put out a blurb on. So anyway, relative strength is how is the stock that I'm looking at, how is it trading versus the SPY, like on a 5-minute chart. If the SPY is moving sideways and down, and your stock is moving up, stacking green candles, it has relative strength, and vice versa for relative weakness. This increases your edge because of the stock that you're in. If the market turns and goes against you, it's not going to go against you as hard because it's got relative strength or relative weakness to the market. Very important, not very well understood. Most retail traders don't use this. They'll use RSI, which doesn't mean anything. I mean, to me, it's worthless. But they don't know enough to look for this trading relative strength and relative weakness. Very important. Trade with the market trend if there is one. If you traded today, you notice that it was a pretty trendless day. We had a big move down on the open, then a nice move up. Market was red, the SPY was red, it was green, it was red, it was green. It just popped all around. That's all it did. And so when we have a trend, we can trade with the market. If we don't have a trend, we have to be more selective. We have to stay in trades for a shorter period of time. We have to take quicker profits. And buying near support and selling near resistance is critical. The support levels and resistance levels we talk about on the daily chart and on the 5-minute chart, this is where you want to get into a trade. In other words, don't be chasing a trade that's stacking green candles right out of the gate in the morning and keep on moving, it keeps going up, 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 and you're sitting there getting panicky, and that's emotion starts to take over, and you've got FOMO, fear of missing out. You jump in, typically you jump in right near the top, and then it reverses on you. Whereas if you had waited for it to come back down to the support level and bounced off of that support level, you'd have been in much better shape. As it is, you end up with a red trade. You're probably bailing on the trade and losing money. So buy near support, sell near resistance. Okay. The compass system, which we used to call it the compass system, it's now called the SPY super system. We've added some additional elements to it and some scans, etc. But it looks at looks for high probability trade setups that the institutions are in, and it also sidesteps ones that look good but fail more often than they succeed. And this is very, very important. And it does this by identifying when the institutions are driving a move and when they're not. The Compass software, the SPY super system software, analyzes complex trading data and displays the results in easily identifiable visual format. This is the great part about this. It's crunching lots and lots of data, lots of numbers, but it's going to present it to you on the screen so that you as a trader can easily determine whether it's bullish, bearish, or neither one. Okay, and so again, it makes it easy for even new traders to be able to understand whether the institutions are in the trade or not. Okay, so that's what we'll show you those. Again, that's another Thinkorswim platform chart. I'll show you those as we go. So this is how we get an edge over retail traders. We're only taking trades that are being driven by institutions. We're trading stocks that have relative strength or relative weakness to the SPYs or the Qs, and we're trading in the direction of the overall market trend. If you follow these 3 rules right here, just these 3 rules, you'll be ahead of about 96% of the retail traders out there. Most of them don't do this. They certainly can't do this if they don't have the ability to do it, and they typically don't look at relative strength and relative weakness. And how does this give us an edge? Again, our trades will be supported by institutional buying and selling. Critical. Stocks will be outperforming the index as buys the Qs, and they'll be moving in the direction of the overall market. All right, so that's how we get an edge over the retail traders. This is I just kind of want to present the thought process I go through when I find high probability trade setups. This is something that's a lot of retail traders overlook. The first chart you should look at for any trade that you're going to be in for more than 15 or 20 minutes. If you're doing a very quick trade that's going to be just a quick intraday trade, you don't really have any intention of holding it overnight or even holding it for an hour. Then you can just use the 5-minute chart. But anything else, any trade that you're taking for a swing type trade, and a swing trade means if you're coming in at 10 in the morning and you're getting out at 3 in the afternoon, to me that's a swing trade, even though it's intraday. You're going to be in there for a while, right? You want to look at the daily chart first. Always look at the daily chart first. Make sure if you're going long, the daily chart is bullish. Make sure if you're going short, the daily chart is bearish. So that's the first thing I look at. Then I want to look at the trend with the market and the stock to see if I can identify a trend. If there is one, I want to trade in that direction. If not, I'm going to have to focus on the other elements. The compass indicators are the SPY super system indicators, now we call them. Those have to be aligned in the direction of the trade that you want to take. So if you're going to go long, you've got to know that the institutions are trading that stock long, right? If they aren't, you don't want to be in it. And then we look for relative strength and relative weakness, we've just discussed. And then we want to enter near support and buy shorts near resistance. Enter near support or resistance. So you're getting into longs at support as the stock bounces, and you get into shorts at resistance as the stock bounces off of the resistance and heads back down again. Okay, and this is just the same thing written out here. The stock should be traded. To be traded should have the daily and 5-minute chart aligned, and the SPY super system indicators must align in the direction of the trade. All right, and have patience, very important. All right, just to kind of discuss what we do in the room and on the alert service, the kind of strategies that we use, pretty straightforward. Straight calls and puts, of course. Today when we were trading, when we were trading PNW today, we took straight puts. We just bought puts, got in, got out, made a nice profit on it, and we're done with that. Straight calls and puts, very, very common. We also do debit spreads using weekly options expiration. Weekly being this week. We do a debit spread today, we would be doing expiration on tomorrow. Time spreads, which are calendar spreads. These are what we use over earnings. They're a non-directional trade. We don't care which way the stock goes. What we're doing is we're trying to capture the volatility crush when the premium, when the earnings come out, and the volatility in the puts and calls is reduced. That's called volatility crush. We capture that with this particular strategy. And then we have another one called the weekly ATM strategy, where we actually sell puts week after week after week against a stock that's neutral to bullish, collecting premium each week while holding a longer dated term put further out in time to protect us in case the stock goes against us and cut down the margin that we need. And we do credit spreads to capture premium over a few weeks. And then we have in the room, we just do this in the room. This is called the SPY super system. These are very high probability trades to catch the SPY moves, the Q moves, the IWM. You can also use them for futures. You can use them on the ES and the NQ. But we call them the SPY super system. They're based on the 5-minute chart. We don't stay in the trades very long. And I'll show you the results we've had with these. They've been extremely, extremely profitable. Okay, the alert service itself, fairly simple. It's designed for day trades and short-term swing trades. We're not doing investments here. It's designed for traders who can't watch the market all day or don't want to. We put up real-time alerts on the highest probability trade setups we find, and those high probability trades will be identified by institutional involvement We look at market internals to see if we've got a bullish or bearish market internals, and then we do some technical analysis to further hone those down to come up with just the best trades. Okay. All right. This is an equity curve. I need to do a new one. This is a year old or so. This is basically was on the alert service. If you put $2,000 into each trade that was alerted from March 23rd of 2023 to May of 2024, about 90,000. And it stays fairly consistent. You know, we do have ups and downs each month, but the overall year to year is pretty consistent, as you'll see here. All right. So that kind of covers just the quick introduction of what kind of strategy I use, what we're looking for. I'm going to do the Heiken-Ashi info here. I'm going to do it right here in this before we get into the results we've had, before we get into the actual charting, because I want folks who are interested in Heiken-Ashi to get this quickly. So this is what we're going to touch on right now. And I'm going to show you some live charts today, looking at Heiken-Ashi candles. I haven't even looked at them yet. I'm going to run a scan and find them, and I'll show them to you. All right. So trading using Heiken-Ashi candles with the SPY super system, not the compass system. All right. Okay. So if you not know what regular charts is, these are candlesticks. These are Heiken-Ashi candlesticks. These are not normal candlesticks. And there's a big difference in the way they're structured and the way they're made, and I'll go over that. But if you look at the Heiken-Ashi candles, you see no upper shadow. That means these are flat-topped candles. So bearish candles, bearish Heiken-Ashi candles have flat tops on them, just like that. They can have tails like that, but they have flat tops. So flat top after flat top after flat top. Those are bearish Heiken-Ashi candles. Now, the reason we use Heiken-Ashi candles a lot in our trading is we're looking for reversals out of a bearish to a bullish trend, or a bullish to a bearish trend. So what we look for is bearish trend right here. And if you were in this trade, you can stay in it as long as the top stayed flat like that. Notice we start to get little tiny wicks on these things now, but still bearish. Now we go from these flat top candles to wicks and tails. Wicks and tails. The candles turn green, but wicks and tails. See right here, you see this flat bottom candle. On this green candle right here, that's a Heiken-Ashi bullish candle. And this would be considered Heiken-Ashi reversal. When you get this candle, after you're coming down, this is a bullish Heiken-Ashi reversal. Now, it's a fairly small candle size compared to these. So this would be a moderate change in direction. I wouldn't say it was strong enough because of the fact that these candles are so big. But you did notice you do get a flat bottom, then you start getting wicks and tails, and then you reverse back down again to the short side, right? So this is a Heiken-Ashi bearish Heiken-Ashi reversal. But what we're looking for here is we're looking for some big candles to reverse direction, because this was a pretty big candles coming down. See how big this Heiken-Ashi reversal candle is right here? Big, huge Heiken-Ashi reversal candle with a flat bottom. This is what we're looking for a Heiken-Ashi reversal to the bullish side. And you notice that the candles stack flat bottom, flat bottom, flat bottom, flat bottom, get a wick and a tail, flat bottom, flat bottom. You see how easy you can see this trend. And then you get out right up here. But that's what you're looking for, these Heiken-Ashi candles. And the thing about a Heiken-Ashi candle is it's made up of two candles. We'll talk about this. So when you get a Heiken-Ashi reversal candle with a flat bottom like that, it is confirmation that reversal has taken place, as opposed to if you were looking at one candle that was reversing. That isn't confirmation. You would have to wait. When you get a Heiken-Ashi candle, the flat bottom on the Heiken-Ashi candle is confirming that reversal has taken place, and it's going back into the bullish direction here. All right. Now, if you've not used these before, and I'm just going to go through the highlights of this when you get the webinar video, you can watch it go through it if you like. But if you haven't used these before in your technical analysis, I'd highly recommend you try them out, because I think you're going to find some pretty interesting results. Heiken-Ashi candles, it means average bar in Japanese. It smooths out the price action, so identifying trends and reversals is clearer, since they eliminate a lot of the noise and makes it easier to see trends and stay in a trade throughout the trend, allowing for improved profits. It keeps you from getting shaken out so quickly. Bullish Heiken-Ashi candles, as I just showed you, have flat bottoms, and bearish Heiken-Ashi candles have flat tops. All right, no wicks, no, and that's really important. Now, one other thing I'll mention about that is if you see here you see the wicks on these bullish candles here. Under normal circumstances, if you were looking at a regular candle, these wicks on the top of the candles would make you suspicious. In other words, you'd think that this really isn't that strong a bullish candle, because it tells you on a standard candle that the buyers come in, they drove the price up, and then the sellers came in and they drove the price back down again. That is not the case on Heiken-Ashi candles. Wicks on the top of Heiken-Ashi candles are even more bullish than without wicks on the top of the Heiken-Ashi candle. Right, so that's important to remember. And now, bullish trends are going to have flat-bottomed Heiken-Ashi candles one after another, just like that. Boom, 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 boom. And the bearish will have bullish flat-top candles one after another. So when you get a reversal, what you're looking for is flat-top candles going to flat-bottom candles. That's going to give you a reversal from bullish to bearish and vice versa. Okay? And again, you can generally stay with a bullish trend as long as no flat-topped Heiken-Ashi candles appear, indicating a lull or reversal in the trend. And now reversals into trends that I just showed you now, reversals in bullish trends will have a flat-bottomed Heiken-Ashi candle, followed by a smaller doji Heiken-Ashi candle, followed by a flat-topped Heiken-Ashi candle. That's a bullish to bearish reversion or break to the downside. Okay, basically a compression break or a break out of the current trend. Okay, and I won't go over all of this. It would take too long, but this is something I did on Reddit a long time ago. I went into detail about using Heiken-Ashi candles. And again, I've traded these things with really great success. I use them all the time on the 5-minute chart to enter trades on an intraday trade. If I'm looking for a stock that breaks above support or resistance level, say a stock is breaking above the VWAP, the volume weighted average price, I'll switch to Heiken-Ashi candles. And once that breakthrough the VWAP is confirmed by a Heiken-Ashi candle, then I have a much higher probability of that trade working. I'll show you some of those. And then I do mention here that once you have a valid Heiken-Ashi reversal, the first thing that needs to be true is the Heiken-Ashi candle height has to be at least as large, preferably larger than the prior candles of the movement that's reversing. And I showed you that back here. When these are coming down, this isn't really a good bullish reversal because these candles are so big and these are so small. This is a great reversal. These candles are small. This is bigger than all of them. Okay. One thing also to be aware of, when you have Heiken-Ashi candles on your chart, the price that's reflected on those Heiken-Ashi candles won't be the actual price of the stock. There'll be a few pennies off because remember, there's two candles making up that candle. Obviously it'll still show on your regular chart as normal. Okay, let's see. These are just basically saying that the trade you should follow the criteria that I've outlined in the room. Relative strength or relative weakness, institution should be in the trade. I look for Bollinger Bands expanding. I'm not going to go into that, but I do look for Bollinger Bands expanding to identify a break of compression. Okay, again, it's critical that the institutional traders are supporting the reversal. That's how I use the SPY super system to find that. All right, this is just kind of a quick recap. Heiken-Ashi candles have evolved from Japanese candlesticks. They combine 8 open-close data from the previous period with open, high, low, close data from the current period. That's how the candle's created. That's how calculation is done to create a Heiken-Ashi candle. Again, the fusion minimizes noise, providing a clearer depiction of the trend, which is what we just talked about. Average is average pace. That's basically what it is of the two candles. And again, unlike traditional candlesticks, Heiken-Ashi doesn't follow the typical 1, 2, 3 candlestick reversal patterns because you can't use the wicks and tails like you do on standard candles. Heiken-Ashi is much clearer, as far as I'm concerned, to be able to use for these reversals. It excels in identifying trends, potential reversals, and classic technical analysis patterns. All right, so these are the advantages. A long hollow candle, that wouldn't too bad. It depends on how you get your candle structured. But this just tells us that flat tops are bearish, flat bottoms are bullish. You don't have to worry about the wicks and tails because they don't operate like they do on a standard candle. All right, and understanding trends. This is what we just talked about. Flat bottom candles in an uptrend signals a strong visual of current strength. So you can see the flat bottom candles here, the green ones. You can see this trend here. You've got a little red candle stuck in here, but big green candles with a little red candle, and then you go right back into the trend again. And you see how easy it is to identify the trend. And this is a reversal right here. Here's your wick and tail. You go from a flat bottom to a wick and a tail, then a flat top. That's a bearish reversal right there. All right, that's a small bearish reversal right there, and then another bullish reversal to the upside right there. And we'll go through some of these charts. No gap trading, Mike. There is no gap on Heiken-Ashi candles, as I'll show you. There are no gaps. But I mean, obviously you're looking at the regular candles to identify gaps. But there are no gaps on 5-minute charts anyway, for the most part, unless you get a halt or something. 5-minute charts typically don't have any gaps. Now you will get gaps on the daily chart, so that's something that you would be aware of. All right, tips for using Heiken-Ashi candles: examine nearby support or resistance level impacting potential gains. This should be for any candle. If you're going into a trade long, you don't want to be trading right into the 200-day moving average, right? You want to be trading with enough room to the 200-day moving average to actually give you some profitability. Align the trade with the current market trend if you can. Choose a stock with relative strength or weakness. Again, these are the same criteria that I use in the room. Monitor expanding Bollinger Bands. You don't have to really do that, but that's something I like to do. After entering the trade, I usually switch to regular candles when I want to exit the trade, so I can identify the reversal that's going against me. I can identify it more quickly, especially if I'm in profits, and I can take profits more quickly. And again, it's going to identify waning momentum more quickly using regular candles. All right, so that's the Heiken-Ashi candles. They look different, but they're very useful. And this is basically the advantages. It smooths out the price action, reducing the noise. It makes identifying trends much easier. It improves identifying confirmation of trends and trends reversals. This is the biggest key right here, because most of the time when you're trying to get into a trade, you kind of like to get in on if you're using a 5-minute chart and the stock's been bullish and it pulls back, you want to get in on a reversal back into the original trend, right? And that's what's going to get you in at a really good price, right close to the support level, but confirm that it's reversing, right? So that's how this works. And again, it helps identify potential exits when the candle bodies shrink or the reversal occurs, right? So those are your advantages of Heiken-Ashi candles. Now, I got a couple of charts here. These are just graphics, and I'm going to go to some live charts. We'll flip back and forth. This is a regular chart on Uber. Doesn't matter when it was; it's old, but you can see this is a regular chart on Uber. This is actually TC2000 that I use for my charting. I use, of course, the Thinkorswim. I use the Compass system or the SPY Super system to let me know that institutions are in there. But I use this for my charting. And you can see here's a gap. We're going to mention. You mentioned the gap. Mike mentioned gaps won't show up on Heiken-Ashi. You'll see that in a minute. But here's the trend that you're watching here on regular candles, right? Here's Uber with Heiken-Ashi candles. Now you notice that the gaps are there's no gaps. But here you see this wick and a tail here bouncing off this line here. That's actually the 200-day moving average. But you see how it bounced off the 200-day and put in a flat bottom candle. Now that flat bottom candle on a daily chart is actually made up of 2 days, right there. That's made up of 2 days. This and this. So that's where you're getting a flat bottom. This is a Heiken-Ashi reversal, and you notice that the flat bottoms continue up here for 5 days. Now, in my TC2000 chart, I have the green candles colored blue if the Bollinger Bands are expanding. That just tells me that there's a compression break. You don't have to have that, but I do on my charts. I have pink for compression breaks to the downside, blue for compression breaks to the upside. So here's the Heiken-Ashi candles here. See how easy the trend is to spot. Moves across right here. You get out here as it starts to flatten, and you don't get back in again, you could get back in right here and ride it for a few candles. Most of the time when you get these Heiken-Ashi candles reversing, you'll get several candles in a row. All right, so that's Uber regular, Uber with Heiken-Ashi. And you can see how easy the trend is to see here. All right, I'm gonna look at some live ones now. I'm gonna do this a couple of different ways. Let me bring up my TC2000 chart. And I'm going to show you some Heiken-Ashi candles here, just so you can see Heiken-Ashi. Then we'll look at them on the SPY super system, right? But what I'm going to do is I'm going to run a scan. Bear with me just 1 minute. All right, so I got a few here. I just ran a scan. This is looking for bullish Heiken-Ashi reversals. All right, so this is GME today. Now these are regular candles I got right here. Here's Heiken-Ashi candles. All right, so this is a Heiken-Ashi candle. You see the flat top here? Heiken-Ashi candle to the downside. This is a Heiken-Ashi reversal on GME. You can see the regular chart how big this drop was. Right, big volume, obviously. Something happened. They actually were issuing more shares to bring in some money to buy cryptos. But that's what happened here. But if you look at the Heiken-Ashi, you can see that this is telling us, if this start working again, there we go. It's telling us I've got a Heiken-Ashi reversal to the bullish side here, to the bearish side here. Now, notice over here, if you start looking at these charts, you can see these very easily. Here's a wick and a tail, wick and a tail. There's a flat top, flat top, flat top. This is a bearish reversal right here. And then it compresses, and then you get another bearish reversal to the downside. And here's a bullish reversal to the upside right here. So that's what that's showing you. Now here's Palantir, Heiken-Ashi reversal on Palantir today to the downside. See the flat top after having a wick and a tail? That's a bearish Heiken-Ashi candle. Here's a Heiken-Ashi reversal on Palantir here. If you grab Palantir here, as it broke here with a flat top, look at the run you got on this thing. Really, really nice. And easy to see, very easy to see. And you can see right here, it's over, get out. All right, so let me go again. I got a couple of them I just want to show you here. So there's Sophie, that's another one did a Heiken-Ashi reversal today. These are just showing, these are actual trades today. These are live charts. Is Intel with a Heiken-Ashi reversal to the downside, and Hood with a Heiken-Ashi reversal to the downside. And SPY had a Heiken-Ashi reversal to the downside. Even though SPY was had a fairly flat day today, the last 2 days in a row was put in a Heiken-Ashi reversal below the 200-day moving average. All right, so that's the shots. Now let me go over and do one other thing. I want to show you this on the SPY super system. All right, so here's the SPY super system. This is actually what it looks like with the SPY today on the SPY super system. It shows you what the SPY super system chart looks like. This is think or swim. These are some of the scanners I've got running. This is a cascading up. This is a cascading down. These find relative strength, relative weakness. But here is the SPY super system, and this is the information that's on there. All right, this is current time frame momentum. This is multi-time frame momentum. This is long-term trend. These are critical. And the only thing you've got is colors to look at. You've got yellow and red is bearish, blue and green is bullish. And you can see at the end of the day, the SPY was bearish across the board. Okay? And if you go back and look today, it was very choppy. You see how it was going from bullish to bearish, back and forth, very choppy day. Not a good day to be trading the SPY. All right? But if you look at something like PNW, which we traded, this is the one we traded today, and these are standard candles I got here right now. This is PNW today. You notice the red here in the current time frame momentum, and the yellow on the multi-time frame momentum. You got a couple of blues stuck in there, but look at how much selling there was in here. This is why we went short this stock today. All right, we went short the stock here this morning. All right, on this breakdown, and see it just kept coming down. We were out of it before it popped back up here. Right now, if I switch over to Heiken-Ashi candles, which you can do here on Thinkorswim. There's Heiken-Ashi candles. There's the Heiken-Ashi candles on today on PNW. All right. So here's your flat top right here. All right, and this purple line is the VWAP, volume weighted average price. This was a breakdown here with Heiken-Ashi candles to the downside. See how smooth this is? It gets down, you don't get any movement to the upside. You get another Heiken-Ashi flat top. That's a bearish reversal. You stay right in this trade. You can stay in this trade all the way down through here. Really easy to see, and see the current time frame momentum on the SPY super system is telling you sell, sell, sell. The institutions are selling the heck out of this thing. All right, so that showed you what the Heiken-Ashi candles look like and how you find those. Again, if we look at the other one we were looking at, what was the one we were looking at over on here? Bear with me just a sec. GameStop. Let's look at GameStop. So GME. Right, GME. All right, so here's GME on the Compass system, or the SPY super system right here. All right, so we go back to the beginning of the day. We still on Heiken-Ashi candles? We are. Here's your Heiken-Ashi reversal on GameStop this morning. Too early, this is right at the beginning of the day. You wouldn't be taking it that early. But as it comes across here and compresses, and you get a Heiken-Ashi reversal right there, you see this goes from buying blue to selling yellow. You see the drop right here? Look at how nice that is. If you just took that, you're out. You've got a beautiful profit here, just trading Heiken-Ashi candles off of the GameStop. So that's what they look like on the Compass system, on the SPY super system. The flat tops, flat top, flat top, flat top. And there's a continuation again, flat top, flat top, flat top. Right, so this is the SPY super system, and that's what the Heiken-Ashi candles look like on Compass system, SPY super system, as well as the my TC2000 charts. All right, so that looks at some of those. So now I wanted to that kind of covers Heiken-Ashi. Let me see. Do we have any questions on those Heiken-Ashi candles at all? It's really not that complicated once you understand how they can help you trading. I mean, they're different. They're candles, but they're much easier to help you trade and get into trade and out of trades, and keep you in trades. But it also gets you into trades after a confirmation has taken place. Very critical. All right, so now I'm going to talk about the room and the alert service and what our results have been as we go forward here. I'm going to show you some charts. This is 2023. This is the trade results using $2,000 per trade. If you took all the trades at $2,000 per trade, typically there's not a lot of trades each month or each week. I think this week we've only had like 3 or something, so there's not an awful lot. But we did make a little over 60,000 in 2023 from the room. 2024 54.9, 55,000. So pretty even. It depends on how the market dictates a lot about profitability. How long can you stay in a trade? How long can you be to get out of a trade? It's if you get choppy markets, your profitability is going to be pushed down a little bit. Trending markets, profitability goes up. All right, and I'm just going to cover pretty quickly some of what our wins are. And the reason I'm doing this is obviously to show you that we have good results in the room in the alert service. But I want to show you what these are the percentage gains on the trades that we took. And most of these we just puts and calls. But you can see here that we run anywhere from 10-15% up to about 35-40% is generally maxed out. We did do a 96 on Boeing here. We did a 65 on Mara. And we did, those are the 2 good ones in January. But again, we had a 90% win rate, 20 wins, 2 losses. The win rate typically is going to run between about 82-83% up to about 90%. But 2,000 invested in each one of these trades, netted 75.05. We do have losses. We had 2 losses this month, so we do take losses sometimes. We actually had one losing month in 2024, and I'll show you that. February, our best month last year. 24 and 2, 11,745, 92% win rate. The alert trades that month, by the way, 20 wins, 2 losses. We don't alert on every trade. because we can't. Some of them are too quick, and some of them we take too late in the day. But it was still 20 and 2 for 6,900. All right, that's February. All right, March, May, I jumped around here. I didn't want to put everything out there, but again, I want you to see the percentage gains, how consistent they are. 30, 40, 18, 48, 32, very, very consistent. We're not going to get 400 or 500% of a trade. If you think you're going to get 400 or 500% for trade, you don't want to be in my room, because first of all, you can't do it consistently. It's just, you're not going to get those kind of results and be profitable. You can't do it over long term. It just doesn't happen. All right, so there was May, again, pretty nice, 88% win rate, 4,900. June, 86, 7,500. So you can see that what we've done here, pretty much when you get the video, you can look at them more closely, but I want to conserve a little bit of time here. So there's August right there. This was our only losing month last year. Here's September, only 13 trades, 8 wins, 5 losses, very few. Lost 1786 in the room, lost 295 on the alert service, 8 and 4. But again, they kind of get swamped by the wins here. 4,500 here, 6,000 here. October, we jumped back up again to 74.48 profitable. And the alert service went to 6,063. So again, you can see the results that we have in the room. This is on 2024. Again, there's November, another nice winning month. And I'm going to cover the last couple months as well, but on the alert service, I want to talk about, for anybody who wants to be in the alert service, what you're going to see when you get the alert. When you get an alert, you're going to get the stock symbol, obviously. You're going to get the option strike price. You're going to get the option expiration date, and you're going to get the price to pay for the option. Okay, that's what's going to show there. So it tells you exactly what you want to do. Now you get one when you get into the trade, and you get another one when we want to get out of the trade. And if we adjust it, we may adjust it again. You may get another one to raise the sell price or lower the sell price, depending on what's happening. If we're gonna take a loss on it, you'll get a text on that as well. And just to understand how we achieve these results, and I think I pretty much covered this. We know when institutions are in the trades and when they're not, and we're only getting in when the institutions are in the trades. And we look for market internals. That's basically the volume of stocks moving up with the volume of stocks moving down to create market internals. We're going to get in if those are heavily bullish or bearish as well. Now, I will take trades when the institutions are in them and the market's neutral. Market internals are neutral, but the institutions are in the trade. I'll take the trade. Okay. So we don't only just take them when both are in our favor, but we do take them only when the institutions are in our favor, and we have a neutral to either a bullish or bearish market internals that correspond to the trade we're taking, that direction. Okay. And how do we do this? A SPY super system, it does triple screen assessment. We're looking at momentum. This is to me the most critical thing. We're looking at momentum across multiple time frames, and we're looking at trend across multiple time frames. Sometimes you can call this fractals, or you call it triple screen assessment. I call it looking at multiple time frames. This is a chart of Tesla. That is an old one, but again, you've seen the Compass super system or the SPY super system already, so you know what these are. Green is bullish. You can see Tesla was very bullish that day. This was a SPY super system reversal. This was when we took the SPY trade for a quick trade off of 5 minute charts. Okay, we took it here and we wrote it down, and we did. This is how we do it on a 5 minute chart. See the little thin line here? That is the 15 EMA. This is the VWAP. Those are our support resistance levels. Stock breaks below the 15 EMA, we take it, and there's the arrow for it. So this is where we get in, and this is you would stay in it as long as the stock stays below the 15 EMA. You could have stayed in it all this way down. Okay. Now, the results I just talked about, the room, these are the SPY super system results. Now, this is for people who are in the room, or they have the SPY super system software and want to trade the SPY, the Q, the IWM, the NASDAQ, the futures. You can trade the futures on this as well. But this is the results that I had, because I can't alert on these. They're much too fast. I can point them out in the room when they're occurring, but these are the results I had members have better results and they have worse results. It just depends, because you have to be able to manage these yourself. So July 16-0, May 25.96, August 56 wins, 6 losses, 2 scratches. A lot of trades in these, but you're only in one at a time, and you're typically only in for 10, 15, 20, 35 minutes, something like that. Very short duration trades. So, but you need to be able to be there watching it when you put these on, right? So 2,000 invested in August produced 82.01, September 71.32, October 48.31. And again, you'll only be in one trade at a time, and they'll be very short duration. All right, so here is November 54.5, December 69.15, 10,000 in December, 9,000 in January and November. We did have a little over 10,000 in January as well. But again, it's important to remember that these results aren't included in the room totals. Remember, I showed you the room totals. The room totals. This is October of 2024. The SPY Super System produced 4,831, which we just showed you. The room itself produced 74.48. None of these trades are included in this, and none of these trades are included in this. These are 2 separate methodologies you use. The SPY Super System for intraday quick trades, for folks who want to trade off a 5-minute chart and be in and out of trades fairly quickly. These are trades that they will last all day or a week or 2 weeks or 3 weeks. This is the option trades. All of these results here are exact, because these are, when I put the trade in there, I post it and I send it out alerts with the entry price and the exit price. So anybody who followed the trades should have produced almost exactly the same results as I got on this. All right, and that was in October. Here is November, 93.70 in the SPY Super Systems, 73.93 on the SPY Super Systems in the room. All right, and again, 14-2 here, 79, 73.93 over here. We had 90.59 trades. Those are a lot of trades. You can make sometimes 5, 6, 7 trades a day off the SPY Super System if they set up, only if they set up. Right, and here's December, 10.450 on the SPY Super System. A lot of wins. We had quite a few losses too, but they're fairly small, because again, we're getting in right at support and right at resistance. And then the December options room trades, 14-3, 45.97. The smaller total here in December here, but this is pretty nice. So there's the first quarter, or the last quarter of 2024, 24,651 on SPY Super System, 17,774 on the trade and the room. Pretty nice. So 42,000 altogether if you took them all, but it's not likely you will. These you're going to have to manage yourself. They're fairly quick. These you can just follow me on. These will be posted, all of these. All right, so I'm going to show you the charts of the SPY Super System trades, and then we'll show some starts of the regular trades, and then we can wrap it up. So this was SPY Super System trade we took in August. Again, the only thing that's of interest to you here is this compass, the SPY Super System current time frame momentum right here. See how it says current time frame momentum? This is what we're looking at, because the chart might look busy, but it's not. We're just looking at the current time frame momentum. We're looking at the VWAP. See where this is? Volume weighted average price. This is a level that all the institutions use. Volume weighted average price. 15 EMA right here. That's the 15 exponential moving average. When we don't get in on the VWAP, we can get in on the 15. Right here, we get in on the 15 EMA and a VWAP break. See how the price broke above there? The SPY Super System produces these little arrows, these pink arrows. These are called pop symbols, or pop out of the box. They show a compression break. Notice we went from selling right here, red, to buying blue, right there on that candle. That candle was telling us that we're breaking out. The institutions are buying, time to get into the trade. And we get into the trade right there, and we stay in it, and now the 15 becomes our stop, because the 15 is pulling away from the VWAP, and we just stay in this trade all the way up, and then we get out right here as we start to get some momentum dying. All right, we get out right there, took profits, $220 a contract, and you notice this went right to yellow here eventually, so we would be out. But this is the only one of these. We're not using this for SPY Super System. We're using this. All right, here's another one here. This was, we just did this in February, $90 profit. Most of the time, the profits are not going to be in the $200 range. They're typically going to run $70, $80, $90, $120 per contract profit. That's usually what you get, unless you're having a really nice trending day. And we haven't had a lot of those lately. We haven't had a lot of trending days, a lot of choppy days. But here you see we went from blue here was buying, we went to selling, but we're waiting for compression to break, and here the compression breaks. Pop out of the box symbol right here on the 15. We take it here, we get out of it right here. This just two candles, right? Still red, but we got it off right here because we're getting some bounce, and we take the profits in that. And this is the actual format that you see now. I eliminated one of the indicators at the bottom, which I don't use anymore, but the money flow, I didn't think it was that effective. And I put in the actual oscillator so you can see what kind of angle you're getting on it. And we also, if you buy the SPY Super System, you'll get this layout as well. This is just for doing SPY Super System trades. All you've got is the current time frame momentum, the oscillator, the VWAP, the 15 EMA, and the pop out of the box symbols. That's all you get. That's all you need to use to trade it. Pretty simple. And you'll get both of these. You'll get this format. In this format, you can swap them back and forth if you buy the software, the SPY Super System software. And again, this is a trade off the new SPY Super System software, as I just mentioned. You can see here that we went yellow, then blue, green. Buy it here, write it up, take it off here. All right. And again, you go back over to blue here. You can take it long here, ride it along the 15, take it off here. That's all you really need for doing SPY Super Systems. Now, on the swing type trades, you do need all of the indicators. This was another one on the SPY here. This produced $130 of profit. That's fairly common. We had compressed here. We broke above the 15 with a pop out of the box symbol. We ride it up. About 8 and 10 candles for profits. IWM, same thing. Right, there it is right there. Yellow, selling, blue, buying, right there. And then it goes to green. These are buying, we buy it right here. Doesn't go anywhere for 5 or 6 candles, but it stays above the 15, and then you go ahead and write it right, and you get up right out here. 90 bucks. IWM, it doesn't move as much as the SPY or the Qs do. SPY Super System here. Beautiful trade on IWM right here. Completely red. Institutions selling the heck out of this thing. You get it right here as it breaks below the VWAP. With that pop out of the box symbol, you write it down, and you get out right here as it starts to show some momentum starting to wane. And notice it went to blue here. Okay, and there's another one. So this is what they look like. These are 5-minute charts. You can see they're fairly easy to see. It's the selling. What you do is you wait for the entry. Here it is as it breaks below the VWAP. You stay in it. It just moves sideways here. You're just compressing, but you stayed below the VWAP right here. And you actually stayed below the 15 the whole way, and then you flushed down. Okay. And this was from another one from 823, but the same basic information here. The SPY Super System is giving us the current time frame momentum. This is what we're using to enter the trade. That and a pop out of the box symbol if we get, when you don't have to have these, but you can get them, and it breaks above the 15 and the VWAP, and you write it up, and you get $150 a contract on this nice little trade right here. And here's another SPY trade here. I didn't put the arrows on here. I wanted you to be able to look and identify this. You notice that we went from red here selling to blue buying, but you notice we hit the VWAP, so you don't go in right here. You don't go in right here. We're right on the VWAP. Here's your entry. As you break above the VWAP with buying going on, this is where you get in, and you just write it up for 4 or 5 candles. Okay, there's the IWM. It's another one. Easy to see. I mean, really easy to see. If you look what's going on down here, you can see it's buying most of the day. You're looking for an entry. You get an entry right here as it rides along the 15 and pops right here with a pop out of the box. There's where you buy it, and there's where you sell it, right up here. And this is SPY System. This is one, just so you can actually do this both ways. This one I took the SPY short right here as we broke down below the VWAP, the pink line. You see we're red, institutions selling. Break below the VWAP right here, breaks down, and I take it here, and then I get basically a little green candle here. So I take profits, and then it comes back up again, and it breaks above the VWAP right here, and it goes from selling red to buying blue. I can take it long, and I take it long right here, and I write it up. And this white line is a pivot point. These are fairly good resistance levels, so I went ahead and took it off as it kind of meandered around above that. But that was a trade. So I took it short, I took it long, back to back. And another SPY trade here, just so you can see, you can see where to take these. You can see right here, this is where you want to take it. See how we went from buying to selling, green to yellow. There it is, coming straight down. Really not that complicated, but they're really, really effective. But you want to be trading with the market. You want to make sure that you've got a little bit of a trend to follow in the market. If the market's chopping up and down between the VWAP, above it, below it, above it, below it, you don't want to be getting into those trades. You want to have some kind of a trend that you can actually follow. This one here, it was, this was an uptrend all day. This was a decent uptrend right here. So, you want to have some market behind you. All right, so that covers the SPY Super System trades. These are the trades that we take in the room and on the alert service, just of some of them here. The reason I want you to see that is because here is your current time frame momentum here, multi-time frame momentum right here, all right, and long-term trend. We want to use all of these on the swing trades. We want them all to be blue for green for long and yellow or red for bearish. So right here, this was HIMS, and I took it right here. Probably could have taken it back here, but I didn't catch it, I don't think. But I took it here. This, by the way, is the VWAP, not used on the daily chart. This is not, you don't use this on the daily chart. But here I took it and I wrote it up, and I made 25% on this thing. I left a runner on, some options left. I left on a few and got a 269% pop. But basically, everybody got the 25% on that trade right there. Easy to see. Here's Palantir. We took Palantir long here. See how it's compressing. See how we go from selling here, yellow, buying green. We get in right here. This is a daily chart. It pops up. We get out right here as it flattens out. We just took profits on it. Market which has been choppy. So this was one we wanted to take 31%. We did. Twillo, we took a 58% profit in 2 days in Twillo. We took this as it went green. Went from yellow to green on the multi-time frame. Current time frame was already green. Institutions were buying on the daily. Now we go to the multi-time frame, which is on the 1 day, the 3 day, and the 9 day. This tells us that they went to green as well. We buy it here. I get out of it right here. Could have stayed in it, but again, the market had been very choppy, and we wanted to take profits on the thing. So 58% profit was pretty nice in 2 days. Lulu. This was a nice one. We're in, this was just an overnight trade right here. We get in here, we get out the next candle, 56%. We get in for $1.92 a contract, get out for $3 a contract. Pretty nice. 192 turned into 300. And again, you can see where we entered it right here, where it went to yellow. We already had red down here, but we had selling here. Institutions are selling it. We take it and it pops down for us. MDT went from yellow, selling, blue, buying, coming up along the 15, take it right there, ride it up. Institutions continuing to buy, continuing to buy. Another one, VKTX. So I think you get the idea. You're looking at your colors to tell you green is and blue are buying, red and yellow is selling. This tells you what the institutions are doing. You now know what the institutions are doing. You want to do what they do, but you just want to pick your entry. You want to get the best entry that you can. This is a nice trade here. In for 8:30, out for 11:30 on McDonald's. Again, this little shaded area is called the dynamic compression zone that the SPY Super System creates. But we also had a pop out of the box symbol right here, breaking out of compression. Take it here. Overnight, bam, out 37%. This was on Amazon. This was a 5-minute chart. This was an intraday trade. Again, looking at we're only interested in the current time frame momentum, what's it doing. Now, it's good that the multi-time frame was also green, but this is what I was interested in. And it came across here, yellow, goes to green, I catch it here. All right, and we were in this for 45 minutes as it rises along the 15 and 32% profit on that Amazon trade. ENPH, another 5-minute chart. See the compression here? Whoops. Compression. See all the red institutions selling the heck out of this thing. Multi-time frame for momentum, current time frame momentum on the 5-minute, all red. Where are we going to do? We want to find the best entry. We get it right here as it pops below the 15 with a pop out of the box symbol. We're in this for 1 hour, and ENPH 20%. Verizon, same thing. Compress, breaks down below the VWAP right there. And we were in this for 1 hour and made 50% profit on it. Everything's red. You can see the institutions are selling. I mean, once you see this, you can see that the institutions are selling here. All right. And this was an overnight on Tesla. We actually took this short overnight on Tesla because we had a pop out of the box symbol in the 5-minute. We had everything gone red and yellow, so we knew it was bearish. And we took the overnight trade, and the stock fell from 112 to 120 to 112 overnight. We rode it down to here. As it rode along the VWAP, we took profits right here. That was a really big trade. You don't get a lot like that. Okay, so that covers the SPY super system, what the software looks like. This is the software you can buy, and you can put it on your Thinkorswim platform. Rightline will put it on there for free. You have to buy the software, of course, but they'll put it on and for free. There'll be no charge for that. And the Thinkorswim platform is also free, so you don't even have to trade on it. You just load it up and you put the SPY super system on there, and that gives you this. Gives you the exact same stuff that I just showed you. Again, here's what we trade in the room and on the alerts, and then we have the SPY super system in the room for basically for quick type trades for folks who want to manage trades quickly during the day. All right. So what we have to offer, just so you can see as we come to a close here, you can get a 2-week free trial on the room and the alert service. If you do that, it's going to be free for 2 weeks. It's not a long period of time, but it's 2 weeks, and you get the training room, you get the alert service, you get all my modules. I have training modules, videos on about 30 of them on all the indicators, all the strategies we use. There's one on doing the SPY super system. There's one on Heiken-Ashi candles. There's one on doing strangles and straddles, time spreads, everything. You've got videos in all of those, and that's for 2 weeks. And then it rolls to a quarterly subscription. Of course, you can cancel anytime you want, but it rolls to a quarterly subscription at $396, right? So that's for the room and the text alerts. Then, if you want to get the room in the alert service at a better price, a much better price, then you can go ahead and get the yearly, $11.96 for the room and the alert service. It comes with a private Discord chat. We have 2 other professional traders in there, all right? And in the videos, of course. Or you can do a one-time payment. You get this forever, and that's at $24.96, gives you the room and the alert service. Michael, where do you go to sign up? I think if you go to the chat box here, there'll be links to the SPY super system and to the trading room and the alert service. But I'll give you a number here you can call. See that 786-732-4656. That's Right Line Trading. Just call that number. If you want to talk to Rory, he'll go over all the details with you. All right, so this is the trading room and the alert service on an annual basis. Right here, $11.96. You get the alerts, you get the trading room, you get the Discord community, and you get all the videos. And a one-time payment for $24.96 gives you all these things forever. You don't have to resubscribe each year. And then we have the SPY super system. Now this is the piece of software. This is a software that goes onto your computer on the Thinkorswim platform that's loaded there. The Right Line will put it on there for free. They take over the machine. It'll look exactly like my SPY super system will on my chart that I showed you, with scanners and everything all in there. So you get the trading system, you get the scanner, you obviously get the videos, the master class. An installation, you get a month free in the room and a month in the text alerts for free if you buy the SPY super system software and have it installed. $14.98, really a good deal. Now you can also do a one-time payment, which is you get it forever. Don't have to renew. $500 more, $19.98, a really good deal. And again, this is for the software itself, and you get a month in the room and a month in the alert service. If you do the lifetime, you get 3 months in the room and 3 months in the alert service, and then you can decide whether you want to subscribe to that further. All right, so there you go. Your 2-week trial with it rolls over to the quarterly for the trading room and the alert service with the videos, and you get it free for 2 weeks. Cancel anytime, or if you want to get a better price, go to the annual, $11.96 for the annual on the room and the alerts. $24.96 for a one-time payment. Okay, and there's the software. Michael, where's the 2-week trial? I don't, let me look in the chat. If it doesn't show up there, you can just go ahead and call Rory, but I'm not sure. Yeah, it says a 14-day trial, free trial. There's a link there that says 14-day free trial. TC2000 layout. No, that's my own. That's a piece of software that I use for scanning. I use it for scanning, but I use the SPY Super System for a lot of the scans. My TC2000 is what I use for charting, because it's hard to chart for me on the SPY Super System because there's so many lines and stuff on there. So I do a lot of specialized technical analysis on the TC2000 charts because I can recolor candles and stuff. But it's not, it doesn't give me any of the institutional information. So I have to have the SPY Super System to get the institutional information. Okay. Thanks, Michael. Appreciate the questions. Thank you. All right, that pretty much covers the video for the webinar for today. I appreciate your taking a Thursday afternoon to spend some time with me. Took a little bit over an hour. I didn't want to spend too much time, but I did want to cover the Heiken-Ashi candles. I think that's really important if you've not used them before, or if you've used them and you understand them. Perhaps we were able to give you a little bit of a better methodology on how to use them effectively in your trading. All right, so I appreciate it. I look forward to seeing some folks in the room and on the alert service pretty soon. And have a great evening. And we'll be back in there tomorrow. We'll see everybody who comes back into the room or on the alert service. See them on Friday morning. Have a good one.
Thank you, David, for another insightful and practical session. Your clarity and consistency in the markets continue to inspire traders at all levels. And a big thank you for the offer you've extended, everyone. The details are in the chat box. And that brings us to the end of today's Traders Corner Investor Summit. On behalf of the entire Traders Corner team, I want to thank each of our incredible presenters and all of you for joining us today. Remember, the chat contains links and offers from every speaker we've had, and they are time sensitive and exclusive. So be sure to take action. Keep trading smart, stay informed, and we'll see you at the next summit. Until then, stay profitable. Thank you guys and gals.